Hello and welcome. This is Brandon Waddell, Chartered Market Technician, and I'm going to do some analysis here on the U.S. equity futures markets. We'll go ahead and start off with the S&P 500. I'm looking at a weekly chart here, and you can see that our weekly chart has retraced about 23.6% on that move that we just recently had on the downside from January 4th. And we'll see if this is going to turn into a bear market or not. There's a lot of signs pointing towards that, but we haven't done so yet. We've only retraced about 14% from these highs. As you can see, the warning sign was the divergence that happened in the price of the indicator, or sorry, price of the index compared to the indicator. We lost a lot of momentum, so it was bearish sign that we are going to pull back. However, as you can see, this drop did not take the RSI below 40, so we're not in the bear market as of yet. What we might see is a pullback, but the big question to see whether or not we're going to go into bear market or not will be, as we rally up, can we make a high that is below 60 on the RSI? If we rally back up, but we can't get above 60 on the RSI and then start to fall and go below 40, then yes, we're in the bear market at that point. So every bear market pretty much starts off that way as well, where you get that small initiate a small pullback, then a quick rally. Doesn't get as high as the previous highs. We can actually see that this is not really a good supply zone, but the origin of a lot of selling pressure on our recent move to the downside. And hang on a second, I got to fix that. There we are with the template. And this area, probably could narrow it down just to this 46.54, 47.39. As we rally back up, if we can't get above 60, we do put a high in somewhere around there, then I would expect prices to continue to collapse and move downwards below our current lows that we just put in recently this week. So something we'll be watching. Probably won't make the high this coming week, but maybe the week after. As of right now, we had an impulse to the downside that took us to fresh lows. So when we go down to the daily chart, what we need to look for is where we might turn around. And I can zoom in a little bit more here and see that we actually have drop area supply on the daily time frame pretty high up. It would be actually about a 76% retracement. But again, it could happen without us getting above 60 on the RSI on the weekly chart, and then that would signify that we're going to continue to make fresh lows. So I expect we might actually see a little bit more. Either one of two things will happen this week: more rallying going on until we hit one of these levels of retracement to turn down, or right now, so far, this 38% retracement's been holding. We could just go sideways, and if we're a lot weaker, then that's what we'll do. We'll end up just moving a bit sideways this week rather than rallying up to any of these Fibonacci retracements. But if it does rally, then we're looking at maybe about anywhere from 61.8% to 78.6%, hitting that zone kind of right in the middle of that. So that's kind of what I'm seeing so far in the bigger picture. Actually, let's go to the specific contract. There we are. And just make sure we got the most accurate data here. I always like to use contract specific. There we go. And again, I can actually go back to the weekly here just to make sure the Fibonacci's are in the correct areas. I use the start of the candle that gave us the move to the downside and then the low when I'm measuring the retracement for an impulse down. So we go back to the daily and actually can drop down to the 4-hour at this point and see that right at the 61.8%, we actually do have a zone right here. So another area that could halt price would be a 4-hour supply zone at 45.59.75, which is quite a bit above where we are right now. So again, either we start going back and forth in this tight range between 4,300 and 44.25 that we're kind of stuck in right now. We just go sideways before we break, or we end up rallying up into that area just shy of that daily supply zone. And there's actually a 4-hour zone you can measure out right here too, right in the middle of that 78.6. So one of those two is likely to be the target. I'm actually thinking it's going to be the 61.8 at 45.59. So zooming a little bit more onto the 60-minute time frame, we are trying to form a bit of demand. It hasn't quite formed it yet, but we have rally, base, 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 and then tried to rally up here. We broke out to a new high recently. So that could be a little bit of a bouncing point if we fail to stay in the sideways range. We could just have a small pullback, then rally out of that 43.74, again, targeting that 45.59. And I don't think I have anything else. There really isn't along the way. This is the origin of the best selling pressure. So that's going to be my upside target for the week. if we break out to the upside. Again, if we break or don't break out, we just move sideways. Just expect choppiness and movements between the high of about 44 and a quarter down to just under 43, maybe 42.75. As you can see, that's kind of the range we have right in here. Yep. Didn't quite catch it right. There it is. That's the range I was talking about. So we could just see continuation of that sideways range going on for this week. So let's take a look at the NASDAQ. I'll go out to the bigger picture first. And on the NASDAQ, we'll go out to the weekly chart. Clean it up. There we are. And we can see same picture for the most part. We had a big rally, a big move up, a bit of a retracement that's going on right now. And we may end up getting, the wrong way here. Apologies, my mouse is acting up on me. So there it is. And we're getting a retracement back up, so we go down to the daily time frame, and you can see that we also, again, did not get below 40 here. It got real close, but didn't actually go below into bearish territory. So if we retrace back up, we have a drop-based drop supply zone, pretty similar to what we saw on the ES, right in between those two levels. And that's about all we have. So again, I go down to the 4-hour chart, just kind of fine-tune this, and we see there's actually a zone. Well, this may not be a zone itself because really it is a retest of a prior area. You see we had rally base drop. Could even add the drop base drop right there. This is actually two tests. So it's similar to what we saw on the ES, but not quite as strong at that 61.8% retracement. Or again, we could just be stuck in the range going back and forth near the bottom here. And that bottom range is kind of in the neighborhood of 14,630 down to 13,844. So just kind of expect some sideways movement back and forth there. Or if we do rally, we rally to about 15,250 area right there as our area of supply before we continue that downward move. And again, going all the way back up to the weekly, if we can't get back into bullish territory above 60 with that high being put in, expect fresh lows to be made later this quarter. So going all the way down to the 60-minute time frame on the NASDAQ, we do have a demand zone that's trying to form as of right now. Once more, that can keep us a little bit more bullish this week rather than sinking and or really just kind of going sideways. So, oops, let me go and see if I can fix this. There we are. It's kind of wide though compared to the move up, so I don't really see that as a very good zone, to be honest with you. As a matter of fact, we're kind of reacting already, or did on Friday night. We may end up doing that again on Sunday morning where, probably not. We might just get a small pullback, but I was thinking this is the origin of really good selling pressure on Sunday night. We may end up pausing a little, but we had so much momentum going into Friday evening, it could carry through and push us right through that zone. Again, pushes all the way up towards that tested area, but if we have enough weakness when we come up to that tested area still in the ES and other markets, it could drag the NASDAQ down as well. Going over to the Dow, once more going to the weekly time frame and cleaning this up. There we are. You can see that we are still making fresh lows as we were on the other markets. And pretty much same picture over and over again. So we are retracing right now from that big move. Whoops, didn't mean to be deleted. There we are. So we go down to the daily time frame to see where it might turn around. You can see there's a drop, base, 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 and drop pretty deep. If this does retrace, that could take us back into bullish territory. But again, if we end up making this high, come on, there we go. Making a high right there and can't seem to get above 60 on the weekly time frame, then we're going to continue to make some fresh lows. In the meantime, you see lots of indecision here. These long wicks and closing away from the highs, it's all selling pressure. Closing away from the lows is buying pressure. So there's a whole bunch of kind of indecision going on. Last week, or actually on Friday, this would have been Friday's candle, we closed very close to the high of the range that we've been in, between that 34,668 down to roughly 33,500. That's kind of the range we've been in right there. But we closed very high, so we have a lot of bullish pressure towards the end here. And it could cause a little bit of movement up out of that range. We go down to the 4-hour time frame and take a look to see a little bit more detail. And again, we have a zone that appears to have already been tested, although that might be the supply zone right there, just above. Oh, there we are, just above the 61.8%. We got 35,137 to 35,379 as our area supply, and good selling pressure coming out of that. So if we break out of the range, that's where we're likely to be kind of turning around and seeing more selling pressure pick up during this week. Could go a little higher, but not really likely with all the bearish pressure we saw in the other markets. And there is actually a supply zone right up here as well, just like we saw on the NASDAQ and the S&P. There's actually quite a few pieces of supply in there where you really just have stair steps down. You have rally, base, drop, drop, base, drop, and then this rally, base, drop as well. So I can't see us going above that 35,700 anytime this week. But initially, if we do break out of the range on Sunday, again, we could either go back and forth in the range more or break out to hit the 35,137. And then finally, we go over to actually, before I go to Russell, I was going to go down to the 60-minute chart and, try to form a little bit of demand here, but didn't really break out of a high. So it's not officially any kind of demand yet. We're just hitting the top of the range. We'll see where we open up on Sunday. We should be able to go above this high based on the momentum, but we might pull back a little bit first before it tries. And once again, I'm just expecting it to get up to this area, 35,137. If we're still below 60 on the weekly chart and we see weakness or some sort of divergence on the daily, that's where I'd expect the turning point for price before we start making fresh lows once again. So let's go over to that Russell, the last one. And looking at the Russell, going out to the weekly chart once again, this has been a much weaker index. As you can see, we don't have the green candle like we had on the other weekly chart. So very, very weak. We have gone below 40 on this RSI, which is extremely weak. We had not done that on the other indexes. By the way, when it comes to market crashes, the Russell usually moves first. It has the least amount of international exposure and is the one that usually crashes and makes fresh lows before the other markets do as well. So this is really wanting to go down. We may be just getting dragged back up by the action of some of the other markets. And if we, again, bring in our Fibonacci retracement here to get an idea of what the heck is happening, there it is. And we go down to the daily time frame. We do have overhead supply pretty much in the same locale as we had for the other markets. You can see right here, as I bring in that supply zone right around between the 61.8 and the 78.6 retracement. And again, we'll watch to see. We do have a positive divergence going on. So the weakest market that's been kind of leading us down is suggesting a bounce. That means that the other markets should definitely bounce, right? Because they were a little bit stronger than this one. So if you're seeing the weakness kind of dissipate, and there it is, you got the positive divergence, usually means move to the upside is coming. And this is happening on the weakest market. You expect the strong markets to react as well. You can even see the divergence as you come down to the smaller time frame here. We're now on the 4-hour of the Russell, and the last two lows did not confirm the momentum. We actually had less bearish momentum, as you can see from the RSI. So this is all suggesting that we should actually bounce and kind of break out of this little downward trend we've been in. Well, it looks like we got a nice little target, a couple of them overhead. We have an area of supply up here. And we've got another area of supply a little bit lower. Right there. Actually, that's the lagging candle. That's the basing candle. So if you go wick to wick, because there is only one basing candle, could push this a little bit lower. And there we are. So you got rally base drop and the rally base drop up above. So we got a couple of areas that could cause its leading market to turn around and start dropping yet again. Even at the highs, you've got a rally base, 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 and drop right there. Another area of supply that we can contend with. If we even get that high, I don't see it happening. This 38.2% is right in the middle of a zone. So that's a really good target for the upside. This could cause a pause and reversal of the trend to push back down. Again, keep an eye out to see if we're above 60 or below. If we're below 60 when we hit this area, then that's going to be a really good shorting opportunity for us to make some fresh lows, or even if we make it up to the next supply zone as well. So that's kind of what I'm seeing in the markets. We can fine tune this a little more in the 60-minute time frame, but nope, looks about the same. maybe rally base drop. So really not seeing anything in here. Maybe a little bit of weakness coming in right away because we hit some sort of supply. There we are. You can see that's drop, base, and drop to a fresh low. And that's what stalled out the markets on Friday. We did just barely get above 60. So that would suggest that after a small little pullback, we should be able to continue higher up to that next level, 22.3 for our supply before we start turning lower. So that's what I'm seeing for the beginning of the week. Expect a little bit of bullishness on Sunday going to Monday. Once we hit the Russell at this area of supply, that could be the cue for everything to turn around. We may not even make it that high on the Russell. Sorry, not the Russell, the Dow, the S&P, and the NASDAQ, because if the Russell starts to find a lot of weakness, it could drag the rest of the markets down. That's been kind of the MO for the past couple of weeks, where we've been seeing first couple of days a little bit bullish and then dragged to the downside by the Russell. So I expect more of the same, and we'll see if that happens this week. Until next time, trade safe, trade well, and take care.